Hello and welcome to another Simple Trading Ideas trading tutorial. In this Simple Trading Ideas trading tutorial, we're going to cover a bit about market analysis. Why analyze the markets? Well, when we're trading, our objective is to stack trade on top of trade on top of trade and build equity as we go. So we want to make a profit on as many trades as possible, and we want to have that profit be as large as possible on each trade. Now sometimes there's a trade-off. If you're trading a high frequency system, you're looking to get in and out pretty quickly, so you're scalping, and that in and of itself means that you're going to be taking smaller profits, but there'll be larger numbers of them. Your long-term trading, you're looking for huge trends and getting in on those trends and making a large profit per trade. Whichever type of trading that you find as suitable for you, you'll need to do market analysis in order to trade profitably. Now there are basically two different types of market analysis, and those are fundamental as well as technical analysis. Fundamental analysis is important as well as technical analysis, and you'll find that there are people in each camp, if you will. Some fundamental analysts say this is the only way to trade or invest or what have you, and technical analysts would say that technical analysis is the only way to trade or invest or what have you. No one should really argue if one is right or wrong, as long as the trader is trading profitably. If you're trading profitably over a period of many years, then whatever methodology you're using is obviously working. Okay, so you may lean towards one or the other. Personally, it's a good idea to consider both, although at Simple Trading Ideas we focus on technical analysis. Now, does that mean that we ignore fundamental analysis? Absolutely not. It doesn't really make sense to ignore fundamental analysis, even if you're a technical trader, because, well, let's take for instance, let's say that you are eyeing a particular stock, and let's say this stock is in a particular industry. Let's say some numbers of years back that the stock produced film for cameras, just your 35 millimeter film, etc., etc. Okay, now ignoring fundamental analysis at the time that digital photography really started to take off wasn't really a good thing if you were looking to buy into the companies producing film at the time, because, as you well know now, try to go out and buy a film camera in any of the many stores available. If you're going out to a department store or a camera store, you'll see that the marketplace is dominated by digital cameras. Okay, so having fundamental analysis handy is always smart, regardless of the markets that you're in. Paying attention to the underlying fundamentals which move the prices in one direction or another is always a good idea. Now, there are those who would tell you that regardless of what the fundamentals are, that the price will reflect those fundamentals. And over a period of time, naturally, that makes sense. That's what many technical analysts will stick to when they speak of their propensity for technical analysis. Of course, like I said, it makes perfect sense. But again, don't ignore the fundamentals. In our previous example, if we had just simply looked at a particular film company whose stock price had been skyrocketing, then we might look at that and go, wow, this thing is on a really fantastic uptrend. Let's see if we can grab some of that before that trend ends. Well, in that case, it would have been nice to know a bit about the fundamentals because, well, we all know what happens to many companies that have produced film, and even those companies that produce film that were trying to leap onto the digital photography bandwagon and may have done so a bit too late. Okay, so two different types of analysis. We analyze the markets in order to make more informed decisions about trading. Now let's move over to a chart. Here we are in our monthly chart of the Dow Jones Industrial Average, and in technical analysis, three primary factors that go into it are price, time, and volume in various combinations. Here we're basically looking at price and time and on a candlestick chart. There's price and time on a bar chart, okay? And as time goes on, prices change, and we have this nice chart to look at to give us some perspective. The chart is the start of much of the information we use in technical analysis. So we may look at the chart and we look for perspective and trends. Again, trend right here. Patterns, and in those patterns we'll look for patterns which have a higher probability of repeating themselves over time. So if we see that, obviously in uptrends there are certain patterns where we have a pullback, then a continuation of the uptrend, then a pullback, then a continuation of the uptrend, then a pullback, then a continuation of the uptrend. So the chart is a place where you can start to make observations, and then based upon these observations you can test out your ideas about where you feel the price is going to go next. And the chart is the basis of so much of technical analysis. Obviously, the chart is comprised of the price and the time in this particular case. So there may be some technical analysts that simply look at the price and time and volume and such using computer programs without even looking at a chart. That's always a possibility. But in our case, we love to start with a very basic chart and then go from there to look at what the price does and write down our observations, and then see if the price will do what we believe it may do at some point in time in the future. Again, this is a very simple and basic introduction to two different types of market analysis with the emphasis on technical analysis. Thank you for taking the time to join us for another Simple Trading Ideas trading tutorial. Please feel free to come to our website at www.simpletradingideas.com for more great trading information. Thank you and have a phenomenal day.